Okay, let's get right into it. Roku just dropped a massive quarter and everyone's talking about it. But this isn't just about one good report. This is about a really powerful strategy that is firing on all cylinders. So today we're going to break down exactly how they're pulling it off. And look, that confidence, it starts right at the top. This quote from the CEO, Anthony Wood, really sets the stage perfectly. Roku isn't just happy about where they are now, they're basically telling us that this momentum is built to last. So what's really backing up all this confidence? Well, first up, let's look at the engine of the whole business, platform revenue. It's up a huge 17% year over year. And look, in this economy, that kind of growth is it's incredible. It's solid proof that their core plan, making money from ads and subscriptions, is working like a charm. And it's not just top-line revenue, right? It's hitting the bottom line. Their outlook for adjusted EBITDA, which is basically how you measure their operating profit, is a record-breaking $145 million for the next quarter. That signals a major shift towards real, sustainable, high-margin growth. And what's underpinning all of this is a rock-solid foundation. I mean, they're sitting on $2.3 billion in cash and short-term investments. That gives them so much flexibility to invest, to innovate, and, to return value to their shareholders. So here's our game plan for this breakdown. We'll kick off with the strong quarter itself, then we'll get into the three key things driving their growth, focusing on the home screen and the ad business. And finally, we'll see how it all adds up to a company that looks financially ready for the future. All right, let's zoom in on this quarter. The really big story here isn't just the revenue growth, it's the fact that they're back to a positive operating income. And that's for the first time since 2021. That is a huge milestone, and it shows a really disciplined and successful turnaround. So you gotta ask, how'd they pull this off? Well, it wasn't just luck, that's for sure. It was the result of a very deliberate three-part strategy that is focused completely on their platform. Let's break that down. This right here is the core of their playbook. Roku's growth isn't coming from 100 different projects. It's all about this intense focus on just three specific, super high-impact parts of their business. And here they are. First, squeeze more value out of that home screen. Second, massively grow their advertising business. And third, expand their subscription revenue. All right, so let's kick things off with that first one, the home screen. I mean, just think about this for a second. For half of all U.S. homes with broadband, the Roku home screen is television. It is the very first thing they see. This isn't just some menu, it's one of the most valuable pieces of digital real estate in media today. Now, they're planning a major evolution for 2026. They're taking this iconic, simple screen, and they're going to make it, in their words, more useful and delightful. And the goal here is crystal clear. Get users to engage more, which then leads directly to better, smarter ways to monetize. Okay, on to the second pillar, their ad business. Roku's ambition here is, well, it's massive. They don't just want to be in the ad game, they want to build the absolute best, most effective advertising platform in all of television, period. And you know what? Their approach is really smart. Instead of creating some kind of walled garden where they control everything, they're doing the exact opposite. Their strategy is all about being open, about working with all the major ad platforms so they can meet advertisers wherever they are. And you can see this multi-pronged attack right here. They're teaming up with giants like Amazon to go after the big brands. They're giving small and medium-sized businesses the tools to help themselves with their own ad platform. And they're adding sophisticated measurement tools for performance marketers. Those are the folks who really care about direct results. They're covering all the bases. So is it working? Oh yeah. A staggering 90% of advertisers who used their self-serve platform were completely new to Roku. This is huge. It proves they're not just serving their existing clients better, they are unlocking an entirely new, massive market of advertisers who could never really afford TV before. And we can't forget about that third pillar, premium subscriptions. Advertising gets all the headlines, but this is actually their fastest growing stream of revenue. By adding top services and launching their own, they're building this powerful recurring revenue source that fits perfectly alongside the ad business. So let's bring it all together. This three-part strategy, it's not just some idea on a whiteboard. It is translating into incredible financial strength and discipline. It's really setting them up for the future. I mean, just look at the proof points. $2.3 billion in cash, over $440 million in free cash flow, a return to profitability, and they're using that strength to reward shareholders, buying back a massive amount of stock while keeping share dilution, which is the creation of new shares, at a record low. This chart really puts it all into perspective. Their cash pile is so large that even after $500 million share buyback, they're still in an incredibly strong financial position. That's a powerful statement about their resources and their confidence in what's coming next. So, if there's one key takeaway, it's this. Roku's success is no accident. It comes from a super clear, focused strategy that connects directly to powerful financial results. It's really a masterclass in execution, turning a great platform into a truly profitable and robust business. Which, of course, leaves us with a fascinating question for the future. As they keep improving that home screen and building out this incredible advertising engine, are we watching Roku solidify its position as the one true indispensable hub of the modern living room? We'll just have to wait and see.